Binance just integrated native USDC deposits from Sei Network. BlackRock, Hamilton Lane, and Apollo are moving real-world assets onto this chain, and there's a breakthrough MEV research paper that's about to flip blockchain architecture on its head. Oh, and Sei just crossed 4 billion transactions while most people weren't even paying attention. So yeah, something's cooking here, and if you're sleeping on Sei right now, you might want to wake up, because the institutional money isn't waiting for retail to figure this out. Welcome back to the channel. If you're new here, we break down the crypto moves that actually matter without the fluff. Hit that like button, smash subscribe, and turn on notifications, because we're diving into why Sei Network is quietly becoming one of the most interesting plays in crypto right now. Let's get into it. According to Alt Crypto Gems, Sei Labs just published research that could redefine how blockchains handle MEV. That's maximal extractable value for anyone wondering. Here's why this matters. Traditional blockchains operate with one proposer at a time, which creates predictable MEV extraction patterns. Sei Giga's next-generation design introduces multiple concurrent proposers, fundamentally changing the MEV landscape. This isn't just academic theory. Sei is mapping these behaviors early so they can build protections before users even feel the impact. My take? This is exactly what separates serious blockchain projects from the noise. Most chains wait until MEV becomes a problem, then scramble to patch it. Sei is architecting protections from the ground up. That's not just smart. That's institutional-grade thinking. Now here's where things get interesting. According to Sei Network's official account, nearly $30 million in real-world assets have landed on their chain in just 2 months. We're talking BlackRock, Hamilton Lane, and Apollo, names that don't mess around with experimental tech. These institutions are using Sei's parallelized EVM infrastructure for global-scale execution. But wait, there's more. Binance just became a Sei Network validator. Robinhood listed SEI, exposing it to 25 million retail users. Binance US and OKX followed suit. OKCoin Japan added SEI to their staking service. And yesterday, literally yesterday, Binance integrated USDC deposits directly from Sei EVM. Do you see what's happening here? While everyone's arguing about which layer 1 will win, Sei is quietly building the infrastructure that institutional capital actually wants to use. The question isn't whether Sei is positioned for growth. The question is whether you're positioned before the market catches on. Let's talk numbers, because that's where the story really unfolds. According to analyst Andrew Mo, Sei just crossed 4 billion total transactions. That breaks down to 517.5 million transactions on Sei EVM and 3.48 billion on Cosmos. Sei EVM transactions got a massive boost since March 25th, pushing monthly transaction counts above 20 million. August hit an all-time high of 71.1 million transactions. So, what's driving this surge? Well, native USDC just went live on Sei, and that's really boosting stablecoin transactions across the board. They've also integrated with traditional finance payment rails like PayPal and MasterCard, which is honestly capturing actual TradFi traffic. Plus, tokenized funds are now live on Sei, creating a steady flow of real-world asset transactions. Something's definitely cooking, because Sei Network had over 1.3 million users yesterday alone. My expert analysis: this transaction velocity isn't random. When you combine native USDC support with institutional RWA integration and traditional payment rails, you create a flywheel effect. Each component feeds the others, and we're watching that flywheel spin faster every single day. Now let's connect the dots on that Binance USDC integration, because, honestly, this is huge. According to Andrew Mo, Binance's USDC balance sits at approximately $6.76 billion. Imagine even just a fraction of that flowing into Sei. USDC to USDT is the top traded pair on Binance, meaning there's massive liquidity just waiting for the right infrastructure. Native USDC on Sei can be used for payments via PayPal, and tokenized funds can issue more USDC directly on the network. So, what does that mean? Well, Sei just unlocked access to the largest source of USDC in crypto. The challenge isn't availability anymore. It's about creating an attractive enough platform to draw that capital inflow. And honestly, based on what we're seeing with institutional adoption, I'd say they're doing exactly that. Here's something most analysts are missing. Sei surpassed 100 million blocks produced. That's not just a vanity metric. That's proof of high-throughput reliability under real-world conditions. When BlackRock evaluates blockchain infrastructure for real-world assets, they're not looking at white papers anymore. They're looking at battle-tested performance. 4 billion transactions is battle-tested performance. Let me give you my hot take on the MEV research paper. Sei Labs isn't just building a faster blockchain, they're actually redesigning the fundamental architecture to prevent the value extraction that plagues Ethereum users every single day. Multiple concurrent proposers create entirely new MEV dynamics that honestly, nobody else is addressing yet. While other chains are stuck playing defense against MEV bots, Sei is changing the rules of the game entirely. The technical setup is equally compelling. According to crypto analyst Alpha Crypto Sign, Sei is trading inside a clean descending channel, but recently reclaimed the mid-level, the first meaningful momentum shift after weeks of controlled downside. Alright, so Sei has pushed back above the EMA 9 and is now just kind of hovering right at the mid-band, with consolidation getting tighter and tighter. Here's what really matters. So, as long as Sei stays above that mid-level, bearish pressure is fading and, honestly, buyers are slowly starting to regain structural control. A breakout toward the upper boundary looks more and more likely, especially if volume expands on the next push. Clearing that upper trend line would flip Sei fully bullish, and yeah, it would open up a move toward the 0.155 to 0.165 zone. Analyst Ali Martinez mentioned that SEI touched the bottom of its present trading channel. My technical analysis? The fundamentals and the technicals are starting to align. When you see institutional adoption accelerating while price consolidates near support, that's not bearish, that's accumulation. Smart money doesn't announce their entries on Twitter. They build positions quietly while retail traders panic over short-term price action. Let's talk about November specifically because this month was absolutely stacked for Sei. The Canary-staked SEI ETF got listed on DTCC, that's traditional finance infrastructure embracing Sei as an institutional-grade asset. Monaco appointed a Goldman Sachs alum as CEO and adopted Chainlink CCIP for interoperability. And, Meta Arena launched its token on Binance Alpha, driving Sei native gaming growth. Carina Finance launched as Sei's first intent-based DEX aggregator with gasless MEV-protected swaps. Each of these developments individually would be impressive. Together, they're painting a picture of an ecosystem that's maturing at breakneck speed. Sei Labs even introduced CXTL to improve operator experience with automated configuration and diagnostics. These aren't flashy headlines, but they're the infrastructure improvements that make institutional adoption possible. The Sei Development Foundation joined the Solana Institute in urging federal action on crypto regulatory clarity. That tells you they're playing the long game with regulatory compliance in mind. So, what's the synthesis here? Sei isn't competing to be the next Ethereum killer, they're building parallel infrastructure specifically optimized for institutional capital markets and real-world asset tokenization. The parallelized EVM execution, the MEV-resistant architecture, the traditional finance integrations, none of this is accidental. This is a coordinated strategy to position Sei as the blockchain infrastructure for the next era of finance. So, here's my final expert opinion. The market is, honestly, underpricing Sei's institutional positioning. I mean, when you have BlackRock, Hamilton Lane, and Apollo actively deploying real-world assets on your chain, when Binance actually becomes a validator, and when Robinhood lists your token for like 25 million users, these aren't just speculative plays. These are calculated moves by major financial institutions that have already done their due diligence. The upcoming catalyst that everyone should really watch is Monaco's integration, with a Goldman Sachs alum as CEO, and Chainlink CCIP providing institutional-grade infrastructure. Monaco could totally drive the next major wave of transaction volume. Now combine that with continued real-world asset growth and expanding USDC adoption, and you've got, well, multiple growth vectors converging all at once. Look, I'm not here to shill any project. I'm here to analyze what's actually happening on-chain and in the institutional adoption landscape. What's happening with Sei Network right now is rare in crypto. You're watching institutional adoption happen in real time, supported by genuine technical innovation and measurable on-chain growth. If you found this analysis valuable, check out my other videos. Drop a comment below with your thoughts on Sei. Are you bullish, bearish, or maybe just waiting for more confirmation? I read every comment and I'd love to hear your perspective. Quick reminder, this is not financial advice. Cryptocurrency markets are extremely volatile and risky. Always do your own research, never invest more than you can afford to lose, and consider consulting with a licensed financial advisor before making any investment decisions. Stay safe out there.